The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
So I'd summarize 2026. Again, it's delivering the base, a clear plan on our production, a clear plan on our cash and financial targets, support that disciplined balance sheet, and then equally use that balance sheet and that cash position to grow the business.
Hello, you're watching Proactive. I'm joined by Dr. Oliver Quinn. He's the CEO of Meren. Oliver, very good to speak with you. You've recently stepped into the CEO role. Why was now the right moment for that transition, especially after such a big year for Meren?
Yeah, thank you, Stephen, and thanks for hosting us today. It's a good question. I think it's useful in that context to step back a little bit in time here and look at the last few years in the business and what's happened there. We've done a series of transactions over 2.5 years to transform what was Africa Oil into Meren. It's a very, very different company. That really completed as a strategic transformation in 2025 with the consolidation of the Prime Nigeria business. We'd owned half of that. We consolidated the other 50%. And so we doubled reserves, doubled our production. And actually, for the first time, we took direct ownership and control of the asset. So that led us to a place where we've got a very, very different business. It's a natural inflection point. So having delivered that kind of transformation over 2 years, we've got this great platform to go forward. And so this was always a planned transition. And so I think we all agreed that that was the right time to do it, coming into a new year, clean platform. Let's go into the next phase of the company there and seek our next growth opportunities.
Looking back at 2025, what stands out to you as the key takeaways from the year?
Yeah, I think 2025, I'd say, was disciplined delivery. So prior years, we'd announced some very big transactions, including the Prime deal. We closed that deal in 2025. And so it was really about execution and discipline. So we closed that deal in March, for example. We then spent most of 2025 consolidating the two businesses. We created a very lean, I think, fit-for-purpose organization for the business we've got today. Whilst doing that, the assets continued to deliver. So very, very good year financially in that respect. And you can see that through our strong shareholder returns. So we returned $108 million, through the year in a combination of dividend and buybacks. So ended the year with that delivery, strong balance sheet, strong organization, and in the volatile world that we're moving into, a very, very strong place for the next phase of the company.
So as you look ahead to 2026, Oliver, what are your immediate priorities as CEO?
Yeah, I think our overarching priority is consistent execution. So again, that consistent execution is to support disciplined capital allocation. So first and foremost for us is balance sheet strength and protection. So we've got good liquidity, we've got low leverage, and that really supports everything we do. So very, very large portfolio of organic opportunities we've got. So lots of contingent resource that we can mature to reserves, lots of short cycle infill drilling opportunities at very high return. And again, lots of kind of external opportunities that come our way. But that balance sheet and the strength of that balance sheet gives us a real advantage. So we'll look to preserve that again through what is already a very volatile period, and we expect to remain so. I think in terms of our assets specifically, Nigeria remains a core focus. So that's our kind of base production, very low cost, very high value. So safe, reliable operations, number one, as always, protect the base. And then I think the other piece that's emerging in that Nigeria portfolio is growth. So I think, we've seen in the industry and actually across the entire country in Nigeria, it's become much, much better as an investment destination. We've had, for example, a tax break in the deep water upstream, which is, pretty rare in the world to get that. And that's a recognition by the government that there's a lot of resource, but that resource needs to be accelerated and matured. And so again, playing our part in that is going to be really, really important. There's near-term reserves growth there for us. There's near-term production. And in fact, we've got some low-risk exploration drilling there as well, which is quite material for our portfolio. Stepping outside Nigeria, we have a position in Equatorial Guinea. That's a very interesting one in that it's gas, and it's gas that's proximal to the EG LNG facility that has capacity and ullage. So what we're looking to do there is develop an existing discovery To do that, we need to bring a partner in, and we're fairly mature in that process. So we'll see how that goes first half of the year. But we bring a partner in, we get, again, the right capital frame, capital structure for our disciplined balance sheet. And that's a short cycle project that could deliver LNG in 3 years or so. So again, for a company of our profile, I think that's a very interesting opportunity. But again, it's an option, no commitment there. We have a second position in Equatorial Guinea, which is EG-18. That's in the outboard area. So that is a much more, I'd say, traditional big exploration position. So multi-billion barrels of oil in a prospect, stacked fan geologically. So one well could test a big volume. And again, we're 100% there. So similar to the gas and LNG block, we're looking for a partner. So our focus will be to continue bringing a partner in, getting the right capital structure again, such that we're not putting a lot of risk money into it, but benefiting from the success if there is one. I think the final piece in our portfolio focus for 26 is the Orange Basin in Southern Africa. So, as a reminder for people, we own a share in the Venus development, and as Total has recently outlined, there's a planned FID in 2026. So we're really, really excited about that. And again, as a refresher, we're fully carried through that development. So we bear no costs up front until there's first commercial oil production. So again, for us, that is a really valuable growth option anticipated to come on stream circa 2030. So big milestone this year, FID there. And then we hold a second position in the Orange Basin, which is in South Africa. Now, again, that's in the exploration phase, Block 3B, 4B. We're actually carried there by TotalEnergies and Qatar Energy, and we're looking forward to advancing that towards drilling in the near term. But again, one of those wells that we don't put capital into, but actually is a huge catalyst for the company in the success case. So I'd summarize 2026. Again, it's delivering the base, a clear plan on our production, a clear plan on our cash and financial targets, support that disciplined balance sheet, and then equally use that balance sheet and that cash position to grow the business, both through our deep organic portfolio and the choices we've got there. And also, again, we'll be very active but disciplined in an inorganic and an M&A sense. If there are opportunities out there that work for us, we'll pursue them. But we're very comfortable that what we've got as a portfolio today stands up on its own.
Well, Oliver, I hope you'll keep us updated with your progress. Thank you very much for speaking with us today.
Thank you, Steve.
Dr. Oliver Quinn, the CEO of Meren.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.